So if you'd love to buy a new home, but you don't want a monthly payment, if you're 62 or older, I have an option for you. You can buy a new home, fits your needs, right size, one level, whatever you need, and not have a monthly payment. Look forward to sharing with you how it works. My name is Matt Helton, and we focus on serving seniors, folks that are 62 and older, just showing them how they can use some of their home equity strategically. And today we have an awesome video for you. It's called Reverse Mortgage for Purchase. Yes, I said that correctly. Reverse Mortgage for Purchase. I'm going to share with you how you can buy a home in today's market and not have a monthly payment. We focus on serving seniors in this way. We want seniors to have the true story about what's going on in the reverse mortgage space in today's world, how it works, the pros and the cons, and how, if it's right for you, how it all works. So I'm going to walk through a couple ideas on how you can do a reverse mortgage for purchase to make sure you have the right property that fits your needs. So I'm going to share a couple slides with you here if you're on the video version of how it all works. All right, here you go. Couple things. Number one is there is a ton of home equity out there that seniors unfortunately are not using. Why is it important for seniors to learn how to use their equity? Unfortunately, it is the only number big enough to be able to solve some of the problems. As you can see, seniors have over $1 trillion in credit card debt, $1.5 trillion of auto debt, over 12 trillion still in mortgage debt. Those are the liabilities, but check this out. The only number that's big enough to try to get into playing the game of erasing all that debt is home equity. And unfortunately, seniors have been convinced that it's okay to use their 401k, it's okay to use their IRA, but it's not okay to use their home equity. Well, that's my passion, is to teaching seniors how it is okay to use your home equity. As you can see, it's a large number. We can't even allow you to use all of it. You can just use a small percentage of it to solve some of these big problems that you have here. All right, so real quickly, what is a reverse mortgage? Well, it's a non-recourse loan that allows a homeowner to use some of their home equity, just some of your home equity. So non-recourse, what that means is if you ever happen to owe more than the home is worth in the future, there's actually insurance that covers that for you. So you never are stuck having to pay a liability that's more than your home is worth. So basically allows you to convert a portion of your home equity to cover those liabilities. It offers optional payments. So you owe money on your home, you can send money in, but you just don't have to. It's optional. There's a variety of products. You get a line of credit, etc. So here's what's changed since 1961, since these programs were started. 61 was the first reverse mortgage. In 89, as you can see, the HECM, these are FHA mortgage. FHA, I'm sure you've heard of that before. And it's the Home Equity Conversion Mortgage. So this program started in 1989, been quite a big evolution. One of the evolutions is in '01, there's counseling. So if this is something for you, we send you some paperwork, and listed in the paperwork, it actually shows 10 different folks you could call about counseling, which goes through the pros and cons from an independent third party. So that's a great feature that's been added. '09 is when you could actually start doing the reverse mortgage for purchase that I'm going to show you a couple examples of. In 2015 was very interesting. So financial assessment implemented. So one of the changes in financial assessment is we have to show that you have enough coming in to cover your taxes, your insurance, and any HOA dues, as well as your credit cards, car payments, etc. So it's much easier to qualify for these than it is for a traditional mortgage, but there still is a little bit of qualification. So we'll share that with you. In 2014, non-borrowing spouse protection, meaning that if you have a 75-year-old married to a 55-year-old, we have to take that into consideration and make sure that the 55-year-old is protected. There were horror stories where the younger spouse getting kicked out of their home, those type of things. So that is all taken care of in today's new and improved version of this HECM reverse mortgage. As you can see here, there are some condo options that started in 2019. 2018, there was information where we sent out, sometimes we have to do a second appraisal on the property, a second appraisal. And then for reverse mortgage for purchase in 2024, there are now options where the seller can still help you with closing costs, just like a regular mortgage. Because as you can see, I like to call this the new and improved, evolved version, consumer protected version of a reverse mortgage. Now, there has been several misconceptions over the years I wanted to share with you. Number one is a lot of people think your home has to be completely paid off to benefit from a reverse mortgage. That would be false. As you can see, one of the most popular reasons to do a reverse mortgage is pay off an existing mortgage in a HELOC. So if you think through it, every single month you have to make payments on a traditional mortgage or a HELOC. This completely changes it where you can make a payment if you want to, not because you have to. So it makes it from a mandatory payment to an optional payment. So we have clients every single day. The big benefit of this is instead of sending $1,000, $1,200, $1,500 a month to the mortgage company, they can decide, hey, that money may be better used for other options. And they can still sell their home whenever they want. As you can see, another misconception says, I'm no longer able to sell my house. That is false. Like a traditional mortgage, a reverse mortgage is paid off when the home is sold, no prepayment penalty. You can sell your house whatever you want. Just like a regular mortgage, you pay off the mortgage balance and you or your family gets what's left over. This one says reverse mortgage is only used as a loan of last resort for seniors without assets. That is false. It also provides an additional opportunities for the mass affluent seniors looking to enhance their retirement strategies. So a lot of seniors will use this option. They'll use this option as a way to delay Social Security, as a way to get money without paying taxes, etc. So a lot of times this can be used as a planning tool for those folks with finances, not just with folks that don't have any money. This says lender takes ownership of my home. That is false. Just like a traditional mortgage, the owner remains on title so long as they pay their taxes and insurance. So you still own your house. You just have a mortgage on your house. All you do, like a regular mortgage, just have to pay your taxes and pay your insurance. This is an interesting one. And two, it goes back to what we talked about earlier, the non-recourse loan. It says, I'm worried that the borrower will leave their heirs with a debt in excess of their home value. So we mentioned the non-recourse component earlier. So all this means is, let's just say that you take out a reverse mortgage, you never make a payment. What happens is the interest is added to your balance. So the balance does go up. Your value is still going up in most markets, but say the market crashes. So, just for easy math, if someday your house is worth next to nothing, meaning that it goes from here down to 100,000, your balance goes up, you owe 200, meaning you owe $100,000 more than the home is worth. The non-recourse portion of the mortgage insurance would pay that. So your family wouldn't even be responsible for that amount. Hopefully that makes sense. So as you can see, the misconceptions have all been taken care of in today's world. You don't have to own your home free and clear. You can sell your home whenever you want. It's an option for all people with finances and without. The lender takes ownership of your home has been a misconception. People have heard you're going to quote unquote lose your house. That is not true. There's just a mortgage on the house, just like any other mortgage. And also too, people think that you're going to be left with way more than your home is worth. That is not true, because most situations, there's still going to be equity. But if you did owe more than the home is worth, FHA, the mortgage insurance, steps in and covers that for folks. So how in the world could you use this crazy reverse mortgage program to buy a home? Well, I'm going to run through these slides here and give you a couple examples. Here's a couple case studies for you. Number one is Sue. So she owns her home free and clear. She's on a fixed income. Her financial advisor doesn't recommend her paying cash for a home, doesn't want her to take out a new mortgage because she's on a fixed income, and they just don't want her to get her budget tight. So she prefers to live in a senior community. She wants to keep her monthly expenses low and have additional income without liquidating her assets. So here's one option that Sue could have. So this would be right sizing without H for P, which means Helton for purchase. So that means in her scenario, her current home is worth about $400,000. when you look at the real estate commissions, closing costs, and incentives, there's some round numbers that would have her cost her about $30,000 to move that property. So out of the 400, you subtract the 30, that would mean she have a net proceeds of about 370,000. Now she'd found some properties that she could buy for around 350. So in this whole scenario, Sue would sell her house, pay off all the real estate commissions through the sale, pay off everything, incentives, etc. Net about 370. Of the 370, use 350 to buy the new home, and she would end up with $20,000 left over. 20,000, not a bad day at the office, but for all the packing and moving and the trouble, may not be worth it to her. So here's another option. What if she downsized and did a reverse mortgage for purchase, or as this says here, an H for P, which stands for Helton for purchase. So she could sell her current home at 400, same 30,000 we just talked about, have her clearing 370 on a $350,000 new home. On the reverse mortgages, we can only lend a low percentage. At her age, she could only qualify for about 141,400, 141,400. But what that means, instead of her on this side having to pay 350 in cash, she only has to bring around 225,000 in cash. So how this works is, instead of being left with 20,000 when all said and done, she'd have $144,000 left over for all of her troubles of packing and moving, etc. Does that make sense? And the difference comes in the form of she could finance a small percentage of that in the form of the Helton reverse mortgage. And just remember, she does not have to make a payment on that. She can, she just doesn't have to. So she'd have more money in the bank, have the property that fit her needs better, and have 144,000. Now here's another scenario. So that was kind of downsizing. Here's an upsizing scenario. So we got Mark and Rose, age 70 and age 68. They own their home free and clear. Property worth around 650,000, 2-story, maintenance. They're flying to Florida to see the grandkids, so they got all added expenses of going back and forth. And they're thinking about moving to Florida, buy a 1-story home, 1,200 square foot, have their own space, but they don't want an additional mortgage payment, or they don't want to tap into their retirement funds. You guys feel that? They need something different. They need a different spot. They need closer to the grandkids, but they don't want to blow all their money. They don't want to have a huge mortgage payment. They don't want to have their hands tied. So this is without the H for P. Their current home is worth around 650 if they netted after all the closing costs around 600. They would have about 600 to play with. The neighborhood they love is 630, upgrades of 70,000, over 700,000. So unfortunately, they'd have to come up with $100,000 to make this work. 100,000. All right. So as you can see, they're happy because they want to see those grandkids. So they wanted to figure out a solution. How does it work? How can we do this, but not hurt ourselves financially, but not miss out on the grandkids? So here's another option. In this case study, the home was 650,000, same as over here, 50,000 for all the commissions and closing costs. That would put them at netting around 600, just like over here, same exact house, 630, 70,000 up. So they need to come up with $700,000, but they're only going to have 600. All right. How could a reverse mortgage for purchase help them? All right. Based on their scenario, they would qualify for around $281,000. So they would have a $281,000 loan on their property. And if you look over here, they would have to come to the table with $444,437 to be exact. All right. So when we compare the two over here of the 600,000, they're going to be negative 100. They have to find another 100,000. Over here, they're actually positive 215,563 in the bank. Do you follow me? So it's a 315,563 swing in their favor. So from one side of the equation, borrowing 100,000 or pull it from their retirement, the other side of the equation to having 215,563 in their bank account. And if you follow me, there's still no monthly payment. It's the same house. And most importantly, they get to do what they want to do, which is be in the right part of the country to be with their grandkids, to meet their goals of having that thriving retirement around family that they want. We know it's a balancing act, finances and money and family, right? This stuff is never just the numbers. It's a lot of emotion. It's a lot of, hey, I want this, but I can afford this. I want this, but I need this. It's a lot of balancing. So the reason why we have the Serving Senior podcast is to help seniors not have to make those really hard decisions without the knowledge of all the options. And as you can see, reverse mortgage for purchase can help people downsize. They can help people upsize, but they can also help people meet their goals of being around family, having more fun in retirement, thriving in retirement, giving money away to churches, living the retirement that they've planned their whole life. That unfortunately, because of all the crazy inflation, the crazy world we live in, a lot of people can't afford to do it. But the one benefit to inflation is it shot your home value up. So what if there's an ethical, what if there's an efficient way to use that equity? And that's what we do, is show seniors how they can use their equity to buy a home, to fix their budget, have some fun, enjoy their retirement, because you as a senior deserve that. You haven't worked your whole life to sit on your hands and not do what you want to do in retirement. You worked your whole life to enjoy yourself. And that's what we're here, is to show you there's other ways, other alternatives, and options that allow you to do that you may have not thought about. So if there's anything that we could do to help you, pros, cons, etc., feel free to reach out either here on this channel, on this medium, or you can call us directly, Matt Helton, 615-400-6764. Have a great day. Thanks again.